All right, I'm going to call up our next panelist for our operator investor panel. Harini Gokul. She is currently the CCO at Intrust and an angel investor. She just got off a plane and came straight here. Thanks for coming, Harini. Ash Roy, CEO at Senior Life AI and also an angel investor. Karan Gupta, CEO at Alice and also an angel investor. And then our very own Pablo Caslimas. He's going to be moderating.
Hi, Marini. It's nice to meet you. Is this the one with the faulty mic? You got it fixed? Got it fixed?
We set you up. We gave you the one that doesn't work. Awesome. Who's excited? This is an operator investor panel, and what I'm super excited about this panel is because each one of these individuals is very, very accomplished, but have a very unique background and a very unique perspective when it comes to angel investing and leading companies. So I think we're gonna have some very interesting answers. So to get us started, I'd love if each of you could, just introduce yourself, tell us about, your journey, what led you to where you are today, and then we'll get into more of the angel investing stuff.
All right. So I'm in the hot seat. Thanks for having us. Very happy to be here. I am somewhat of a recent, 2 years, transplant to Seattle. So great to see so many people and looking forward to meeting many of you. I'm Karan Gupta. I have a background in AI and robotics. That's my technical background. I somehow got into startups from the very beginning in my career. My very first job was as the second employee at a small startup in Texas. And I learned a lot about so many different things you need to do to build a company. From there, I went to some big companies, including Sony PlayStation. And then I started my company. It was a Slack-like startup called Mammoth. We went viral for a little bit, and we exited. So that was good. Also went through an accelerator called AngelPad. Some of you may have heard of it, based out of New York. So learned a lot about how many different companies operate and how they're built. After that, I helped scale 2 companies to IPO. One is The RealReal. The other is Shift.com, where I was the CTO. And now I'm on my latest company called Alice, where we're making an extremely reliable recorder. And we use a bunch of AI and workflows in the back.
I love RealReal. So you've got a fan and a customer right here.
Yes.
I'm losing my voice. I've been speaking all day, but I'm so excited to be here. Thank you, Pablo, for having me. I'm Harini Gokul. I've lived in the Seattle area on and off for almost 21 years. It goes by very, very quickly. And the Seattle freeze is not a thing. You do meet people eventually. It takes a few years. Yeah. I've been an operator for 25 plus years. Again, it goes by very quickly. And when you work for incredible companies like Microsoft and Amazon, you get the opportunity to work, to build, scale, and grow billion-dollar businesses in enterprise. You learn how enterprise decision makers work. You learn what use cases get paid for, and you learn how to innovate. And those are the 3 things that made me think about investing. About 15 years ago, I had an opportunistic start in angel investing, and it led me, I enjoyed it. It turned out to be the right investment. So then there was more momentum to go do more of it. And since then, I've been an investor both with venture capital firms, private equity firms, and also do angel investing in addition to my full-time operator job. And I wear a 3rd hat. I sit on my city council in my city of Medina, which is right down the road near Bellevue.
So when do you sleep?
Sleep is overrated, my friend. I have a 10-year-old as well. So for all the moms out there, I see you.
Should I go?
Yeah, of course.
Well, this is the faulty one.
Oh, no, take mine.
This is good. This is good. So I got to be nice to you. My son goes to Medina Elementary School. So I am an operator first, investor second. Just by way of background, grew up in India, went to some tech school, classical stuff. 12 years in, almost 12 years in New York, Manhattan, and then 12 years in Tokyo. I just moved here. So we built, I helped build one company in New York a long time ago. It was a publicly traded company. We acquired about 4 companies. 2 of them worked out. 1 saved our butt, and the other one was a disaster. Then my second startup, I would say, this is my third startup. My second startup in Japan, it's a company called LiveSmart, LIVESMART.jp, .co.jp also. We are now the number 2 smart home provider in Japan. So about a third of the market uses us, a third of the utilities and developers. I founded that company. It's going to go public, hopefully, in 2 years, and who's who is an investor there and customer. We don't have salespeople. Basically, we build it out for Tokyo Gas to Mitsubishi, and we take SaaS revenue at the back. The third company we built in Japan, starting from the other company, to look at, which is a big theme now everywhere, which is look at older adults and kind of see if we can analyze, now that we have the GPUs, now we have the newer models, analyze the video, basically a 20-second clip, whether it's movement of the limbs or eye movement and facial movements, motion, and then from there predict mobility issues or dementia, right? Cognitive anomalies. I think we have one of the largest video databases in the world now of older people, labeled data, that allows us to train, basically, you know. I moved here about a year and a half ago to build it out in the US. I'm the founder and CEO.
Why Seattle particularly?
Oh, that's a good question. We actually looked at all the way. I didn't want to move back to the East Coast, all right, like New York, right? We looked at all the way from Santa Monica to Palo Alto, San Francisco, Portland, Seattle, and then East Side. And so things kept going worse through COVID. We've been looking to move for 3 years, 4 years, right? So we moved in late 2022. We have a kid, and we said, okay, good school, it's fine. And we love the mountains. Next week we're gonna row from Tacoma to Gig Harbor on the ocean, through the Narrows. I've done it twice. I love it. There's so much nature here.
Amazing.
I love it. We love it.
I'll join you for the rowing.
You come in.
Also, how do we get those pre-IPO shares for the second company you were talking about?
Yeah, I still own 20% of the company, but I don't know. I have too many restrictions because I'm still a key person in the whatever. I don't know, actually. I've looked at it.
Awesome. So cool. Let's get more into the angel investing stuff, which is why a lot of you came here. So share with us, what got you started. I know Harini talked briefly about, how she got into angel investing, but, would love to hear everybody's perspective on like what was, how'd you get into it, and, just a brief overview of kind of like how many deals you've done, or just like what you're interested in, just to get an idea of you as an angel investor.
I got started because actually I met this founder, and she was extremely tenacious. And personally, I was already at at one of my jobs, and I was missing the startup side of it, doing things, being an operator, starting companies and building companies. I was missing that. And she was such a phenomenal founder that kind of got me on that journey of starting to angel invest and meeting more founders and kind of being a small part of the company. I've done a few deals, not too many. What I would say is now there are ways to do many, many deals. There are platforms out there where we can put like a little bit of money and start getting engaged with the company. Or of course, you can participate big if the company really excites you.
Yeah, all of those sound great. So I have a couple. I talked about how I started opportunistically, but then I function on sort of 2 vectors. The first one is, just being in enterprises, and how do you innovate, and how do you innovate at scale, and how do you do it securely, and how do you do it efficiently? So there's a very pragmatic way. I saw all these opportunities working with everyone from Walmart to DoorDash, seeing all these opportunities that they could automate better, manage their multi-cloud environments. Boring stuff. But you all know it is the highest margins. It is revenue ringing all the time. And I love solving those problems. So every time I came across companies that solved problems like that, I would write a check. Turns out they were pretty good problems to bet on, right? So my portfolio kept growing up. I have about 35 B2B infrastructure startups that I've backed, and it's a pretty decent portfolio. I love that. The second one is sort of the adventurous part of it. It's the one that's like, that would go rowing down the Narrows part of it, right? And that is for anything that can make humanity better, things that improve the quality of life and have impact on society. So one of them, as an example, is this robotic startup, and it is autonomous robots, and it's all about last mile delivery. Zipline is the version of that in the US. In India, it's called Red Wing, and it's this company that delivers healthcare services to rural India through drones, right? And that is a problem worth solving. That is a problem worth backing, and those really move me. Similarly, I backed a menopause startup because femtech is a huge category, unfortunately doesn't get the funding it needs. And so I wrote a check for that. So my investment has always been on these two vectors, very pragmatic business, nuts and bolts problems, and big, ambitious, moonshot, but make humanity better problems. And they both are so interesting because you learn from both perspectives. So I loved what you said about the work you were doing, and it sparked. I work in quantum as well, and that got me thinking, because what you're doing is so important, like supply chain and optimizing that is really going to make a difference to bottom lines as well as top lines. And if you crack the code on it, you're off to a great start.
As a super quick follow-up, have you, from the data of all the investments you've made, have you seen that one of those two categories has like significantly outperformed the other, or has it been like pretty standard across the board?
Right. I want it to be one way, but the data says differently. My B2B infrastructure, the more boring you get, the more money I've made off it. It's just the plain truth, right? It is just the truth. The more interesting ones, like the menopause startup, actually exited. They got bought out, but they've struggled. And so someone up here, the last panel said, you're in it for the long game, right? So I'm a big believer of that. I don't need to see any returns. I think especially as an angel investor, you're going 10-year plus, right? So I don't need to see anything immediately. And so I do, and my B2B keeps giving me the revenue, the flywheel that helps me invest in these moonshots. So think about, you didn't ask the question, but what I would say is as you build your portfolio, think about what you want to see in the portfolio. What do you want near term? What do you want for your passion? What do you want to sort of create the flywheel for your long term?
Awesome.
I'm not as experienced as you are, not at all. I have made angel investment. Let's see, I've made maybe 7. And most of my investments are large, large meaning personally large, like at least a couple of $100,000. So, and I get involved in the company, which is not necessarily a good thing because I don't know a lot of stuff, right? But I have an opinion. So, but I'll give you. So there are 3 rules. So the approach to my approach to life and a lot of things is, so our company, this company, for example, it's purely focused on failures. No talk about success. We focus about failure. We're obsessed with getting mud under our nail, right? And 3 things has never changed. Somebody's faster than me, somebody's better than me, and somebody's got more money than me. Hopefully not the same person. So I have invested in companies where I could get involved, I could bring something to the table, and it's interesting for me. The thing that really excites me is to be able to solve unsolvable problems, which is obviously everybody wants to do that and want to be Elon Musk, but nonetheless, that curiosity drives me, and if I find I'm old enough to figure out, it intuitively if this is a big market or not. And if it's good and somebody's trying to solve complex problems and has a big market, I'll put in some money and I'll also get involved. And so, for example, your CFD, I started in CFD, computational fluid dynamics, from IIT Kanpur. And then do you know there was a company called Fluent? So Fluent CEO is I know I used to know him a long time ago. So that's in New Hampshire, right? They were got bought by ANSYS, yeah, it's a long time ago. But anyway, so that's a business, that's an engineering, I don't know quantum computing at all, but that's an engineering problem I understand very, very well. So if I know something, I'll get into it. If we don't, I'm shy.
And you brought up this great point about being an operator, you just instinctively want to get down and dirty and try to work with the founders or help the founders. Have you, and this is actually for everybody, have you guys found that sometimes in some cases you drive the founders crazy, or like it doesn't go the way that you were planning, or or do you feel like you've actually been able to contribute significantly to the companies in a lot of cases, or a little bit of both?
I'll give you my take. So if I have a portfolio of $10 billion, right, and then I'm allocating assets on a risk-adjusted basis, I don't have to get involved with the founders. But if my portfolio is $10 million, right, and then I'm allocating $200,000 to a single asset, I think the best way to protect your money, and also it's not just for money, I'm having fun. You gotta have fun, right? But you gotta stay away from founders' ego, especially, and figure out who's got a big ego. You can't deal with it. I have had that mistake. We put in $800,000 into a company that was recognized by United Nations. It had the best technology, even to date. I don't know. To protect glasses, it's a micron coating, but it's transparent. Protects heat, basically, right? Doesn't allow the heat to come in. The founder wouldn't do, so I just left the table with the money as well.
Wow.
Yeah. So. But I've had successes as well. I like to get involved, so.
I'll give you, so my take is, I like what you said about where you can learn, right? So it's a two-way road is how I think about it. There's always an opportunity to learn, and I always come out the wiser, regardless of whether you make money on it or not. In my experience, if you invest early on, right, which I do a lot, pre-seed, Series A, most founders are really good technically. They're very deep from their technology expertise, but I've never really scaled businesses. They've not done, go to market at scale in Europe. They've not worked through policy. They've not worked with governments and done lobbying or done, sales or other sort of customer-facing roles. And I find that's where my expertise really helps, because they're good on the technology part. What they need help is the customer use cases, right? Working backwards from what customers want. How do I scale this? What does GDPR even mean, and why should I care about it? So it's all of those that I love, because you actually bring value to the table to help the founder and the company be successful. And in return, I think it's that bi-directional, where I learned so much about a business that I wouldn't have known about, whether it's drones or whether it's about sort of provisioning in a multi-cloud environment, or pick a third thing you love, right? So I think if you go into it with an opportunity and a mindset of wanting to learn, it's going to be a great experience regardless of the financial outcome.
Can I make one comment? So
Yeah.
I think Ken made a great point about ICP, right? Ideal customer profile. I think it's just getting harder and harder, because the past is not a good predictor of the future, and companies are behaving so wildly now because of AI. It's very difficult to pin down the ICP now. In some cases you can, but in a lot of cases they change their ideas in 3 months and how to go about the existing pain point. So anyway, that's what we're finding. So
I think that's pretty fair. People are getting very open to changing how they work, and especially recently, as there's more and more AI coming, more and more products coming. People are rapidly realizing how they can supplement their basic workflows and change things. In terms of getting involved, I usually get involved with companies where founders are open and receptive and where there is something I can contribute. It does come in waves. So there may be a stage of the company where I'm, very helpful, and there are other parts of the company where I can't really provide any value. So I'll get as involved as being on the table with them, brainstorming, literally building out the prototype, 2 weeks working together, and then not talk to them for 8-9 months. But usually I'll wait for the founder to reach out, and if I don't hear from them for a few months, then I'll ping them.
Awesome. So I'd love if you guys can talk about maybe your most notable or the investment that you've made that has either made the best return or has gotten the furthest or has the most traction right now. And then talk about how did you find that opportunity and what led you to invest in that company?
There's this one company I can talk about. I mean, there's a few smaller ones, so not going to mention them right now. But there's this company called Alfie. It's Alfie AI. And that company has pivoted like 3 times. And the one thing that has stayed constant through it is the founder is just amazingly driven. Will do whatever it takes to help the company succeed. And I think that came across in the early part, of when we were meeting and getting to know each other. And I think that is, I still have to see a return from that company, but I think we're getting there. So I'm still early, I guess, in the cycle, maybe compared to our previous panel and some of these guys here. But yeah, let's see.
So it's like picking one of your favorite children. I cannot pick one. I feel very lucky to have, despite the past couple of years, it's actually, I feel to have a good portfolio right now. But to build on your point, right, I think there are some things that are sort of the lowest common denominator. Like what is the pattern matching, right? That's what you folks want to know. Like what's the pattern matching that makes a portfolio successful? And it starts with the people, like the previous panel said it too, right? And for me, it's not about machismo or bravado or the person with the biggest personality. That's actually a big turnoff for me. I love the nerds. They are the best, the ones that, doing the simulation. So I love that that's my ICP. But it's important to find a founder with resilience, right? Pretty much any investor, angel or otherwise, will tell you that this business, that you start with a problem, it's going to pivot, it's going to change as you go through the journey. And what makes the difference, in my perspective, between being successful and not is your ability to thrive as it changes, to embrace that change, to take your team with you as it changes. So I'm looking for someone who's very comfortable with very ambiguous situations. A messy, messy bowl of spaghetti, can you make something out of it? If yes, I'm going to put my money with you, right? So you need the founder and a team who's very resilient. And you need a business problem that is, and think about technology, right? If you're building technology, one that's adaptable across different use cases and scenarios, because as you pivot, what you've invested in pivots with you. And the third thing, of course, is what are you going to get out of it, right? Like back to my portfolio, I have a couple things. Either I learn or I make money. And sometimes you're lucky and you do both. But you want to do one of each, so that's the third criteria. Are you going to get one of the two out of it?
I don't have that much depth like you guys have. But again, so I invest and try to do something with it. Hopefully I can. So the second company, which is going to go public, was not started by me. I took an idea, brought the guy. Then we realized we don't know how to go to market because we don't know the people, we don't have the Rolodex. So I got the guy who was head of toy business at Amazon in Japan. Then we got a bunch of other people, built the product, sold it on Amazon. Overnight, it became a bestseller. Wow, okay. And then comes, so we sold I think about 15,000 or close to 20,000 of those units. Those are, like, think about it like a Nest hub, right? Then on Saturday at 10 a.m., everybody tries to connect it because they just bought it in the last week. They all try to connect it at the same time around 10. The whole server crashes. And then our rating goes from some people 5-star, 5-star, 5-star to 1-star, 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 right? It was a disaster. And we took 1 year to understand, don't go after the consumers. We completely changed the business. And then we went after the businesses. But businesses give us all kinds of, hey, we want this, long sales cycle until we figured out how to crack that model. And then here we are. So I have a lot of scars.
So you did a hostile takeover, and the company's now going to IPO. Incredible.
Not hostile.
I'm totally kidding. Amazing. So
That's how you know you have product market fit, when the servers start crashing.
Yeah. Yeah, and don't get excited too quickly. There's something going to happen. There is at least one pothole. Trust me.
Oh yeah, there are probably many potholes.
Many, yes.
So obviously you guys have had a lot of experience in building companies, also investing. Are there some commonalities amongst the best operators, the best founders that you guys have backed that stand out?
Rule number one, it stands, I say that every day, every single day, recruit somebody who is faster, better than you. Recruit somebody who's better than you. Recruit somebody who's better than you. And these are the 3 cardinal rules. And keep your ego zipped. And if you can attract the best talent to work with you and not making them feel like they work for you, it's golden.
Yeah, you heard what I had to say. It's like check the ego, right? No bravado, fewer PowerPoints, more data, more use cases, more customers, and a willingness to learn and evolve, right? As things come your way, are you playing ping pong or are you playing chess, right? The folks who play chess, my bet's on you. If it's ping pong, go learn how to play chess.
Yeah, I'll second that. I think the founder is probably the most important, the founder that can attract talent, that knows how to go find talent. I think that's a superpower, not always just people you worked with. You have to go and find people beyond your network who are best for the company and be able to attract them for less to no pay. I mean, that takes a lot of skill. And then you have to have that ability to be able to learn from the many people who say no to you and basically just have the resilience. So I think having tough founders is probably by far the most important thing. The second thing I do look for is, do they actually have an eye to making a business versus just, collecting users or something. So if they aren't really thinking about revenue, if they aren't able to think about profitability, and they'll probably have it wrong in the beginning, but at least they are thinking about it. They're making a business. They're not seeking a quick exit vehicle or something like that. So I tend to look for that.
So nobody invests in a company that they think is going to fail. But when you look at the data, the overwhelming majority of early stage startups will actually fail. So what is a lesson that that you guys have learned from backing a company and it didn't go the way that you thought it would go?
The number one reason that I've seen companies fail has been just like, oh my God, so much founder drama. And so I think that's where it comes back to, like, as long as the founders have their egos in check and they actually are able to work together, that already gives them a big leg up on other players in the same space because they're going to have competition. Another reason companies fail is, when they're too chaotic. Like every new data point from a customer, every new question by an investor causes them to rethink their whole, reason for existence. So I think, people have to have some conviction. So hopefully you can find those things out early on. Sometimes you can't. But yeah, those 2 things I've seen.
Yeah, I call that, one of my favorite things from my time at Amazon is being frugal. And when you say being frugal, most people think it's just about being frugal with cost and finances, but that's not true. It's being frugal with your time. If I make a decision to be here today, I'm not doing something else, right? So you're actively prioritizing and trading off time. And so being frugal with your choices, which I believe is what you were saying as well, is so important. And when you are at that early stage, everyone is a shiny object you want to go get. Every customer you want, right? Every event you want to be at, every PR opportunity. And when I have failed, and I've failed a lot, right? Lots of war wounds and scars, it's because of teams, not just founders, teams who could, and their backers, who couldn't say no and hold the line. Not able to prioritize is the #1 reason to fail early on, besides ego and the personality-driven things. And as an investor, I fail when I go out with emotion, right? Anything I've invested that is emotion over data or sort of, or doing it because somebody else did it. Sometimes you see these, especially the past, not the past year, 20 months, but before that, it was so frothy, right? You had founders coming and saying, I have 2 hours. If you want to get on it, now is the time to get on it, right? And I will let you write this check for me. How many of us heard that? I will let you write this check for me. And here's everybody else who's already at the cap table. And the times I fell for that and didn't do my due diligence is where I failed. And that is a very good lesson. Like, no FOMO. I do not want to be at the cap table with some big ticket guys if I have not done my due diligence. So walking away from opportunities is a good thing. And when I don't do that, I fail.
I have 2 lessons, both with my personal self as well as investment. I really don't like myself, including, and others, founders who are not able to face the ugliest truth very quickly, right? They're selling Kool-Aids to themselves and not asking like why would the customer even pay you 1 penny, right? Have you really understood, is there any value to it? Are they going to change all their workflow to adapt to you because it's the best thing since sliced bread? So that's one. And the second is, I think one of the angel panels mentioned is if the founder or the team or whoever is responsible is not watching cash closely, very, very closely, you could just burn out right before you were supposed to be a wildfire, right? Because you just didn't have the cash and somebody else had it more. So those are the 2 things I think key. And then if you have been thinking about it every day when you wake up and you go to bed, then you manage your cash, right?
Amazing. Those are some great nuggets of wisdom. We're going to wrap up with one more question, and then we're going to open it up to the audience. So if you have some questions, have them ready. So last question is, we've got a lot of founders in the room, and it's never easy to raise capital as a startup founder. So curious, for the investments that you guys have made, how have those founders found you? How did you get in contact with them originally? And for founders here that are raising, what are some advice for them to be able to get in touch with angel investors?
Okay, that's a good question. I thought that only warm introductions worked for a very, very long time. And so I wouldn't invest in any company unless the founder was able to find me through a mutual connection, and that was actually a good connection, not just, someone connected to me on LinkedIn. But I'm changing my mind to the fact that, sometimes cold introductions can work. Just you might meet some right people that way. But I typically lean towards warm, but open to cold meetings. And I have raised money that way through cold emails, and of course met a few good people that way as well.
So I have 2 things. One is I'm a big believer in community, right? This is very I get energy from this, watching folks pitch, and having these huge dreams and ambitions makes me super excited. So I try to do as much of this as possible across the world. I'm in London a lot. I used to live in the Netherlands, so we are a big investor in Europe. I've started going back to India a lot in the past couple of years, and the energy there is off the charts right now. It's insane. You should go there. It's warm.
Maybe a little too warm.
Maybe,
That's why I left Miami for the summer.
So I think the community is good because seeing people sort of in their natural habitat, right? Founders with other founders gives you a sense of who you are as a human, but also who you are as a person and how you sort of benchmark against other founders. So I like seeing founders in their natural habitat. The second thing is, investor communities, right? So I'm very fortunate to be a part of the Seattle VC community, to be a part of a lot of Seattle angel communities, and it's been incredible. Many of my first deals came through those connections when people brought me on through an SPV or another vehicle. So very fortunate about that. The third thing, and this is sort of the dirty secret, I love repeat founders. Right? To me, that's the best bet I've been taking these past few years are founders who've exited any which way. It doesn't need to be a huge exit. You've sort of gone through the journey once, and I'm going to, 90 out of 100 times, I'm going to put money back with you. So if there are any repeat founders in this room, I absolutely want to meet you today.
Are you writing a $5 million check?
By the way, we have one right over here who sold his company to Nordstrom Rack, so I'll introduce you afterwards.
I don't do consumer and retail or MarTech. I do boring B2B.
I think I think one of your angel panels again mentioned this is don't pitch it to everybody, because just get to know what their preference is, where they're from, just figure out what the audience is, and two, tech and all that stuff. You're going to talk about it, you're excited about it, blah, blah, blah. But at the end of the day, they want to know, do you have customer traction? Show it in some way, even if you don't have ARR yet. If you cannot show the customer traction, then they just get a little nervous because it's still an idea stage today, especially, may not be 2 years ago. And it's just a team, and then it's hard to describe that there's no team that's perfect, so it's just a team. Yeah.
Awesome. I think we have time for maybe 2 or 3 audience questions. So, who's got some questions? Over there in the back.
So it sounds like you're highly concentrated on boring companies in the B sector, but just in general, for any investing, do you run a diversified portfolio in general, or highly concentrated on why?
So the question was for Harini, and it was asking, she's focused on the B2B sector, and he's asking if she has a more broad focus or... Oh, for all the panelists, okay.
For the other panelists,
Okay.
not for me. Okay.
For everybody, for all of you.
I mean, I love what she said. I love dev tools. I think they aren't getting any attention these days because everyone's crazy about Gen AI. But yeah, I tend to invest in stuff I understand, stuff I can actually get involved in. So not really stuff like ads or, biotech and stuff. But so I don't know if you can call that diversified, but mostly within tech.
So I think about it, I'm a recovering engineer, so I think about life mostly in quadrants and vectors anyway. So I talked a little bit about what I invest in, right? So the subject matter, it's B2B or more sort of frontier tech that changes humanity and society. And the other aspect is geo for me. So I invest in 3 places, again, places I know something about. The US, the Northwest, and the East Coast. So Boston are 2 of my primary focus areas. I believe there is so much good value out on the East Coast, way better than what we have here. Europe, we are big in the Dutch startup scene. We lived there and we invest there, and we believe given they punch way above their weight, and they're English speaking, and they go to market very easily in the rest of the world. So if you ever need intros to the Dutch ecosystem, I'm happy to make that. And third is India, where I was born and raised, and I'm very, very gung-ho about their potential as they move forward, especially in the enterprise cloud space. And then on the technology pivot, sort of the third angle, right? It's the B2B. I do a lot of, it's hard to think, Gen AI, because we've always done machine learning before Gen AI came into play. So data and AI from that perspective, And I'm CCO for a cybersecurity firm. We just acquired a massive digital identity firm out in London. So I do a lot of identity, deepfake, fraud detection. That's my third space.
I don't think I'm qualified to answer that question, but I have invested, I mean, in the sense, portfolio investment, but I've invested in what I liked. Interestingly, the first company we built was an ERP software integration. Second company is in smart home, complex hardware also. Third company is watching older people with vision-based AI and predicting dementia or mobility. The fourth company we'll be building most likely is about how humans will adapt in the space. So I have no idea. I mean, I do not think it's a portfolio approach for me at all.
We have time for one or two more.
Continuum.
One right over here.
I just watched the Inside Out 2, and one of the things they mentioned is the anxiety takes over, and then every time I look at me, and it looks like not good enough to raise a pre-seed and seed round. So in 2024, like what criteria you guys looked to from the founder side to someone is raising like pre-seed and seed round?
So the question is, in 2024, what is the criteria that angel investors are looking for to fund pre-seed and seed startups?
Well, good movie, by the way.
I was wondering what the reference was.
Yeah, I went with
The
my,
reference
yeah.
was, the anxiety says that whatever you do, it's not good enough.
Yeah.
So the anxiety.
Anxiety. Okay.
It's a character.
It's in
the
the-
character.
yeah.
Okay. Clearly, I'm watching the other things. 10-year-old things.
I don't think you can seek validation from investors that your business is good enough or ready for something. So I think it just has to come from within. Like and it can come in a variety of ways. If you don't have revenue, doesn't matter. Maybe you have interviews with customers that you've done. If you are building a enterprise class company, maybe there are 2 customers who you've been talking to for 6 months, right? So you have to find that confidence to counteract anxiety somewhere, which indicates that, yeah, there is an actual business here and it's worth it to real customers. And like, this is a real business. I mean, I kind of look for that signal.
So I'll say a couple things. Money today is more expensive than it was a couple years ago, right? And I'm loving it because I think the rationalization of the scene has really sort of helped people think through. 2 years ago, no one would be asking the question you did. They would be like, you're so lucky to be at my cap table, right? So the first part is the problem you're solving for and what's your conviction about it? The second is, and that's to me is the value prop part of the conversation, right? Are you convicted about like this is the right problem to be solving for today? It might change. The second thing is the path forward. And what breadcrumbs do you have to point to a successful path forward? Could be proof of concepts, could be
Sorry, I didn't know how to stop it. Sorry, go ahead.
could be prototyping, but something to show that you have evidence for a path forward. And evidence is important. You don't need outcomes yet, but you need some evidence, right? The third thing for me as an investor is I want to know what you want to do with your raise. Most people raise, they don't really, and they say, and when I ask them and they go, tell me what you're raising for, and they say, oh, I'm going to expand my sales office. You're like, no, that was the wrong answer. Like at that stage, you're not expanding, you're not hiring expensive salespeople in suits to sell anything, right? You're making your product better, you're figuring out product market fit better, you're doing technology work, you're making sure you're staying close to your customers. So I think for me, that's the third thing is if you're raising money, what are you raising it for? Versus raising it because it feels like a rite of passage and everybody does it, so I'm going to do it.
I don't have many suggestions. I think every situation is different, but 2 things you gotta have the grit and you gotta be scrappy, man. That's the only, even when you have a billion-dollar company, if you forget those two principles, if you're a billion-dollar company, you're trying to raise $500 million for something, same situation. So, got to have grit and got to be scrappy.
Absolutely. That's a great note to end on. So give it up for our amazing panel.